All right, everyone. Good evening and welcome to Learn Trading Psychology, hosted by the Traders Crib tonight. This is our bi-weekly, every 2 weeks on Tuesday nights. We come together and we kind of speak more on topics that will help us develop and evolve into the traders that we are becoming. And so we have conversations about various topics and we can get really personal here. And the space is created for you to ask questions and get really interactive. And that's what Learn Trading Psychology is about. And tonight, we're going to be talking about taxes. Yay! Because we're all ready to prep for our taxes. And again, a part of becoming a trader is embodying the lifestyle that's required. And this lifestyle for us involves taxes and certain practices around taxes in order to ensure, excuse me, that we're maintaining our profitability. We're not getting in trouble by the IRS. We're keeping things in balance. And so that's the overall goal of tonight's session. So tonight, I hope you all are all ready with tax questions. Okay. Because we will have Mr. Shavar Sampson, who is also my husband, low key. But nudge, nudge. But we'll keep it very professional here. I'm very excited for tonight's session. But before we start and I bring him on, I'm going to get us in our mindset. Just like we do every session, we always start off with mindset. And since we didn't have a live day trading session, I'm going to bless you all with today's mindset from Robert Greene's The Daily Laws book. Today was a very interesting trading day for those of you who were trading or who attempted to look at the market. We had fun in Telegram, and it was just, oh man, it was a day of very little movement into the last end. That power hour really came through, but we'll get on that later. Let's start with mindset. All right. So if we flip to January 23rd, all right, and in the Daily Laws by Robert Greene, the title states, create a ladder of descending goals. Create a ladder of descending goals. And the law states, remember that what you are after is a series of practical results and accomplishments, not a list of unrealized dreams and aborted projects. Working with smaller embedded goals will keep you moving in such a direction. So what he overall states here, because this excerpt's a little longer, but what he's overall trying to get everyone to realize is that you have this big goal, like case in point. Randy is trying to be the next all-female hedge fund owner, right? Because we just do stuff, right? We could just do that. we got all men. So with that big of a goal, how do I get there? I have to break it up into smaller little steps, into the trader's crib, into profitability trader, education, small little goals along the way that are going to get me to that $1 billion hedge fund, right? Where I probably, I just can't wait. Like the vision is so big. All right. So that's what we're overall getting at. And I want you all to keep that with you and focus on that, building habits that will help you reach those goals. One of those goals being profitable trader, right? And an example of that would be taking small moves, just fair value gaps, just order blocks before you try to go bigger and then you get all stressed out. So that same principle applies to your everyday trading goals. This is why I love that book, because we can apply it to trading every day. All right. All right. So again, welcome everyone. I'm excited to see everyone who can make it. I think Shavar is ready. You ready over there? All right. So I will introduce him. He's ready to go. We're going to have him present taxes. I'll let him do his spiel rundown of what it's gonna be, and then I hope you guys are ready for questions after that. So introducing Shavar Sampson with Sampson Financial. Take over the show and teach us about taxes for traders. You got to unmute, babe.
Okay,
There
yeah,
you
okay.
go.
Yeah, good evening. First and foremost, I just want to piggyback off your short intro about your vision being very big. And there is a quote that if your vision doesn't scare you, it's not big enough. So kudos to you for that. If I could share my screen, please. Um,
You're co-host, so you should be able to. You want me to
yes, one
unshare?
second. Yes,
There you go.
sweetheart. Okay. Are you with me? Can you see everything?
I don't see your screen.
We can't see your screen.
Oh my God, my goodness, Lord. Okay, 1 second. Whiteboard. No. All right, here we go. Okay. Can you see it now?
Mm,
There it is.
there it is. It's there now.
Okay, you have it. Okay, perfect. All right, so the first thing I would like to do is before we get into, mark to market, M to M, schedule Ds and tax write-offs, etc. As a day trader, the first question you must answer to yourself is, according to the IRS classification, are you a day trader or an investor? This is the very first question you have to answer before you even think about taking a mark to market election. Why is that? It is like this because in the IRS on topic 429, this is the actual topic in the IRS 429, which is called trader in securities. It says specifically there are special rules apply if you're a trader in securities in the business of buying and selling securities for your own account. The law considers this to be a business, even though a trader doesn't maintain an inventory and doesn't have customers. To be engaged in business as a trader in securities, you must meet all of the following conditions. It's very specific. You must seek to profit from daily market movements in the prices of securities and not from dividends, interest, or capital appreciation. Your activity must be substantial and you must carry on the activity with continuity and regularity. Now, this is not clearly defined as in like when it says your activity must be substantial. This is not saying, you have to trade like 10 months out of 12 months. It's just simply saying that your activity must be substantial. I have some more information coming to help you differentiate between substantial and non-substantial or carrying on the activity with continuity and regularity. As we keep going, the following facts and circumstances should be considered in determining if your activity is a securities trading business. The typical holding periods for securities bought and sold, the frequency and dollar amount of your trades during the year, the extent to which you pursue the activity to produce income for a livelihood. This is very careful. And the amount of time you devote to the activity. If the nature of your trading activity doesn't qualify as a business, you're considered an investor and not a trader. It doesn't matter whether you call yourself a trader or a day trader, you're an investor. And this is coming verbatim, word for word from the IRS topic 429. Okay, in other words, you must first determine that what you are doing, you're spending time in the markets, you're not holding your securities for longer than typically 1 year. And I doubt most of you are. The frequency and dollar amount of the trades. We have a lot of trades. The extent to which the activity produce income for your livelihood. So this is not saying, you only take one payout like every 60 days, or you only take, you only sell your position every like 90 days. No, you're in there, you're consistent with it, you're constantly trading, you are always into this. And this will help you determine that you are a trader according to the IRS. Now, some people call it TTS, and that would be the tax trader status. Whenever you hear TTS, tax trader status, that just simply means you have searched out IRS topic 429. You say to yourself, you know what? I trade substantially. I'm generating income for my life, for my family, for my husband, for my kids. And this is something that I devote a lot of time to. All right, cool. Once you have satisfied this topic based on the IRS, you can now move on into section 475F, which is called the mark to market election. You hear about this a lot. We're going to get into it in specifics tonight. Okay, when and how to take the election. Okay, as a trader, you must make the mark to market election by the original due date, not including extensions, of the tax return for the year prior to the year for which you intend the election to become effective. Let me explain this if you look to the bottom. In other words, when filing your 2023 taxes, you know you have to file those in 2024. You have until April 15th, 2024 to make the election for the 2024 trading year. In other words, if you plan on making a mark to market election for 2024, when you file your 2023 taxes this year, you know you have until April 15th. If you are not going to do an extension, you must attach a statement to your tax return that says you're making an election under section 475F. The first tax year for which the election is to be effective, you would put 2024, and the trade or business for which you're making an election. In this case, it would be you, your Social Security. Now, hopefully you have an EIN, you have your LLC set up, C Corp, S Corp set up, whatever that is, you have that set up. In that case, you would use that information in place of your Social Security when you attach that to your tax return for the tax year 2023, because you cannot make the mark to market this year after your tax filing deadline for this year. There are no late elections based on the IRS court cases and every kind of study you can possibly do. There is no late elections allowed. Now, once you have satisfied this and you have the mark to market election, now we can talk about the benefits of this as a day trader. And I'll sum it all up, but you can actually see everything right here. The primary benefit to a day trader of making a section 475F mark to market election is that all losses from the trading activity, whether the losses are from actual trades made during the year or from marking to market all securities held at the close of the year, are treated as ordinary losses rather than capital losses. I highlighted this, are treated as ordinary losses rather than capital losses, because if you have filed taxes in the past and you were handed from your like Fidelity, Fidelity, TD, Ameritrade, you were given a 1099-B. Now that 1099-B, every one of you will receive a 1099-B. Once you get that 1099-B, that is attached to your Schedule D because you are a person. And this is the sale and disposition of your capital assets. This is how you calculate your capital losses, your capital gains. Now, because we are talking about let me find, oh my God, babe, I cannot move this. All right, let me see. Let me see 1 second. Okay, we have our Schedule C, Schedule D. Okay, we would be filing our 1099-B on our Schedule D. If you have TurboTax and they ask you that question, do you have a 1099-B? TurboTax will automatically filter in this information for you. But because you have that 1099-B, you put it on the Schedule D, and this is how you do capital gains and losses. But the key thing I would like to point out is that the simple fact of using a Schedule D means your losses are capped. Your losses are capped at $3,000. And this is because there's a tax code 1211B. Tax code 1211B is where Congress fixated that amount. That amount that you can only claim as a loss is in tax code 1211B. But what this means is that, let's say you're a trader, you have losses for the year. Let's say your losses total we'll just say $25,000 in losses. But because you have not satisfied the mark-to-market election, you are only allowed to write off $3,000 of that 25,000, which means you still have $22,000 in losses that will now be carried forward. This is called a carry forward worksheet when you file your taxes. In other words, for the remainder of your existence, you will be able to write off $3,000 of that remaining $22,000 each year. However, because you have decided to take the mark to market election, you can write off the whole 25,000. You can actually claim all $25,000 because you have made the mark to market election. Now, thus the $3,000 capital loss limitation does not apply to the losses from the trading activity if the election is made. And the trader can use the full amount of the net losses from his or her trading activity to offset ordinary income. Notice your losses will be called ordinary losses, and then your income will be considered ordinary income. Case in point, you have a normal 9 to 5 and you make $100,000 in the year. Now, all of us know the primary goal for filing taxes is to only report as much as you have to. In other words, Uncle Sam is going to get his cut, but it's up to you to determine what amount of that cut he shall get. So now you have $100,000 in income, but you are a trader and you have $50,000 in losses. With the mark-to-market election, you can claim that $50,000, which knocks the $100,000 down to $50,000 of reportable income. Now, if you do not make that election, guess what? You will only be able to claim the $3,000 in capital losses against the $100,000 of ordinary income, making you report $97,000 in income to the IRS. And we know, based on the federal income tax rates, that $97,000 is going to be taxed significantly. You know, your tax tables, your tax rates, your 10%, 22%, 24% is what you're going to be hit with. And this is just an idea of the tax rate if you're single, married filing separately, married filing together, head of household, it doesn't matter. You will have your $97,000 hit. So the primary idea of the M2M is to be able to claim all of our losses for the taxable year. Okay, it says the trader can use the full amount of the net loss from his or her trading activity to offset ordinary income from other sources. So you might be, a salon operator, you might cook food on the side, you might be a babysitter, daycare, whatever else you have going on to produce income, you can now use your trading losses to cut that income off. And it actually helps. Right here, it states that losses that cannot be used in the current year are carried forward as net operating losses. Okay, next point. Even though you are not in actual business with inventory, you are still treated as a business for taxation purposes. Now, if you have the question inside of your mind of, well, I don't have an EIN, I did not register myself with my local government to get my articles of organization, you are still treated as a business based on the IRS definition of a trader. This is probably the only industry where you do not have to have a actual LLC EIN to be treated as a business. All right, next point. Traders report their business expenses on Schedule C. Now, this is where it gets very interesting. Now, when we are talking about our business expenses, I will circle back to this with some more in-depth examples because this is going to tie into things you probably want to hear about, like the home office deduction, what portion of your HOA can you write off, what portion of your phone bill, your internet bill can you write off, traveling, to your Invest Fest seminars, things like that, hotel, airfare, parking tolls, parking tickets, just everything you want to know about. We'll circle back to that. But this is the primary reason you want to make the M to M, because you can include all of these expenses as well as your deductions. I'll tell you this. Every deduction is an expense, but not every expense is an deduction. Once again, every deduction is an expense, but not every expense is a deduction. Another benefit of the mark-to-market election is that you avoid the wash sale rule. Now, I'm pretty sure all of us are familiar with the wash sale rule. If you are not, let's talk about it. Wash sale rule. A wash sale is a transaction in which an investor sells or trades a security at a loss and purchases a substantially similar one 30 days before or 30 days after the sale. This is a rule enacted by the IRS to prevent investors from using capital losses to their advantage at tax time. In other words, there was a time in the United States where investors and traders would deliberately take a loss and turn around and purchase that same security, but report that loss to offset their earnings from that same security. So Uncle Sam got smart. Congress got together. They say, you know what? We need to stop these people from, in other words, voluntary taking a loss on one hand, purchasing that same security, and then having profit on another hand. So this is where you get the wash sale rule. Now, if you do not make the M to M, you are now held liable to the wash sale rule. Penalties are high, et cetera, et cetera. So this is something you do not want to get hit with, because a lot of you are in and out. You are in and out today, in and out tomorrow, in and out in 7 days on the same security or even a similar security. Now, if you sit back and think to yourself, okay, what is meant by similar security? Well, that's just what it means, a similar security, which means if you purchase or sell 30 days before or 30 days after, you're now subjected to the wash sale rule. Now, the IRS instituted the wash sale rule to prevent taxpayers from using the practice to reduce their tax liability, because once again, the goal of filing taxes is to say, hey, Uncle Sam, I'm filing my taxes. And hey, Uncle Sam, I only want to tell you about this amount of income. That is the primary goal of filing taxes. You only want to report what you have to. So there were people who deliberately, if I sell these stocks, futures, options, contracts at a loss, and I know I just generated 1.5 million, I'm going to lose 1.5 million and have to report zero. I know we've all heard about, President Trump only filing taxes on $1 of income, et cetera. All of those little, statements we hear about people who are 6-figure earners, 7-figure earners, and they're only reporting $20. Well, that is because they're able to reduce their tax liability with the proper tactics. And one of those tactics is mark to market. And yes, mark to market can also be used if you buy and sell real estate as well. So now back to the benefits of the mark to market election. Remember, if you are a trader and do not make the election, then you must go through the Schedule D for reporting trading activity and are subject to the wash sale rule and limitation on loss as well. The number one thing we want to do as a trader is avoid the capital gains and losses. Why is that? The capital gains and losses are spoken about on topic 409. Please, if you need verification, go to the www.irs.gov, type into the search bar topic 409. You're going to get capital gain tax rates. Most of us are, I would say, not, curious, but we want to know, would I be hit with a capital gains tax? Well, let's talk about it. Net capital gains are taxed at different rates depending on overall taxable income. Overall taxable income. You have $100,000 in trade-in income. You have trading losses of $50,000, but you did not make the mark-to-market election. So your limitation is only going to be $3,000, which knocks your taxable income down to $97,000. that $97,000 is going to be taxed. If you are, let's say you are single, you're going to get the 15% capital gains tax rate. And this is not your income tax rate. This is your capital gains tax rate. But if you make the mark-to-market election, you're good. So now if you are single and you have taxable income of less than $44,625, capital gains tax rate is going to be 0. Married, filing jointly, or a qualifying surviving spouse. If you have less than or equal to 89,250, your capital gains tax rate is 0. The capital gains tax rate is very, very important. It is our function, our number one duty to make sure our taxable income is less than any of those 15%. So we'll be hit with a 0% capital gains tax rate. This is very important because you do not want to get caught up, with the 15% on your capital gains, and then your income tax is going to be hit with 22%. Now you're sitting at home like, wow, I got $18,000 in taxes, because for one, you did not make the M to M. Number two, you are using a Schedule D because you have that 1099-B form that was sent to you. So now, to circle this all up, when you are a trader, you will, and you have made the M to M, you can now take what is called a home office deduction. Now, the home office deduction is the primary thing a lot of us want to hear. It's the primary thing a lot of us want to talk about because we're talking about expenses. Please understand, when you file your taxes, okay, let me go to a 1040. Okay, when you file your taxes with the IRS, okay, look at line 12. Okay, line 12 on the standard 1040. This is the 1040 form you are going to be filing your taxes on when you file your taxes this year. Whether you use TurboTax, Tax Act, it doesn't matter. Any kind of tax filing software must use this form 1040. Okay, line 12 says standard deduction or itemized deductions, Schedule A. Look to the left over here. Standard deduction. If you are single, the IRS are going to give you a standard deduction of $13,850. Okay, you might say to yourself, what does this mean? In other words, a deduction reduces your income. So as a trader, you must say to yourself, how can I reduce my income? Because a lot of us are trading and have 9-to-5s. So the benefit of you having trading losses is you can knock down the income from your 9-to-5. Okay, cool. So now I have a standard deduction. And if you are married filing jointly, $27,700, head of household, $20,800. Now, if you are able to itemize and add up more than, as a head of household, $20,800 in deductions, you can take your itemized deduction on Schedule A. I want you to understand that what you are itemizing on your Schedule A is not what you are going to claim on your Schedule C. This is not the same thing. This is when you go on to file your taxes. There's that box on TurboTax or Tax Act that says, do you want to take the standard deduction? Now, what this means is you got computer software at home, you got your trading accounts, you have your trading subscriptions. If you're like subscribed to Randy's Trader's Crib, that whatever you pay $60 every single month, like you can add all of this up and this can go towards your itemized deductions because you are actually able to expense all of this. These are things you pay in the ordinary course of your activity. Now, the standard deduction or the itemized deductions are what a lot of people get caught up on. But what I'm specifically focusing in on is the Schedule C as a trader. Schedule C is your baby. This is your focus. This is your primary form that you want to file as a trader, because when you're talking about the Schedule C, you can now write off everything you cannot write off on a Schedule A when you are going towards a deduction. The Schedule C allows you to write off literally everything because you have a trading business. Now, if you have your LLC EIN, this is for you as well, because you may have cards, a phone, you travel, you sit down and talk to people at Starbucks, the cost of the coffee. A lot of us do not save receipts. I'm old school. I save them. I mean, I literally every time I go out, I save them. Now, when I save them, I take pictures, I scan them. Now, I use QuickBooks. You may use whatever kind of software you want to save the receipts, but you want to save them for taxation purposes when you're talking about your Schedule C. Now, I'll go back over here for 1 second. And when we're talking about the home office deduction, the IRS has a very curious term that they use. It's called exclusively and regularly. What this means, if you are going to try to claim your room, your office, your hair salon, if you are going to try to claim your garage, your appendix that's attached to your home on your land as a home office deduction, this is the first test you must pass. Now, when you are talking about exclusively, this means the use of a home office means that it is used solely for your business activities and not for personal purposes, including investment activities. This does not mean you have to set aside an entire room for business purposes. It does not mean that. You can meet this test if you have a section marked off for your business activities. Regularly means that you use it on a consistent basis with no set amount of hours by the IRS. However, occasional or incidental use will not suffice. Here's an example. Okay, here's an example. You have a home. Your home is 1,800 square feet, but your home office is 12 feet by 15 feet or 180 square feet. Therefore, your home office is 10%, which is 180 divided by 1,800. Now, what this means is that your home office deduction, everything inside your office, I don't care what it is, copy paper, ink pens, paper clips, computer monitors, internet subscriptions, whatever you pay while you are in that office is now a deduction. Let me carry this forward. Once you determine the size of your office in relation to the size of your home, in this case, it is 10%. You have a power bill each month. Your power bill each month, $100. We'll just keep it simple. I know it's going to be over $100 for some of us, but I'm just going to keep it simple at $100. Okay. And you pay your power bill all year. That's $1,200 you've paid on a power bill. Well, guess what? You can write off 10% of that, $120, because your home office took up 10% of that power bill. You can do the same thing with light bill, water bill. You can do the same thing for every indirect expense for your home. You will take that 10% off of that total amount, and this is a home office deduction. Everything you do while you are inside your home office is a deduction that can be used when you file your taxes to lower the reportable income that you have to tell Uncle Sam that you have. Now, there's a simplified method that the IRS offer you. If you're one of the people who say, you know what, man, I don't care about the calculations. I don't care about, trying to figure out the size of my room. All the rooms in my house, they're not the same size. I don't have time to go through all of this. The IRS have a thing called the simplified method where they give you a set amount that you can deduct. Now, the IRS is not into the business of giving you extra. So it should tell you, you know what? This simplified method given by the IRS, it sounds kind of like that standard deduction thing with the Schedule A. Oh, that's because it is. But it's the same thing as a standard deduction because you are a business owner and you have a home office. So if I was looking to reduce my taxable income, I'm going to take the home office deduction 1000% of the time, because I will like to deduct everything I spent for the whole trading year, along with my trading losses, along with my itemized deductions. I want my reportable income to be at least $100. Last year, just a personal caveat, I was able to report only $180 to the IRS. But my taxable, I mean, before I did my scheduled C's and everything, I was close to 85K. But with proper, tactics and practices, I got it down to under $500. So now what I would like to do is recap, because if you don't know what the 1099B is, this is the 1099B. You will receive this. Everyone who is a trader and you have a trading account, a brokerage account, you will receive this. Your broker will send you this. And then you enter that information into your tax software, to your tax professional, tax advisor, and they then take that and either put it on form 8949, which then go to your schedule C because you took the M to M, or they put it on the schedule D, which then go to your form 1040. And if you go to your form 1040, right there, line 7 says capital gain or loss, attach schedule D if required. The schedule D does not help you as a trader looking to benefit from the mark to market election. So our goal as day traders is to be able to, 1, make this election, and 2, claim every deduction possible, and 3, only give Uncle Sam what we have to, not a penny more, and sometimes a penny less. And with that being said, the floor is open. If you have any questions, I would love to answer them at this time.
Just raise your hand, guys, and then we can take your questions one by one and go about it that way. You guys good? That was everything you need to know. Maria in the chat, and you can put the question in the chat, but Maria's just like, this was just great information. Thanks, Maria.
I
I
do
mean,
have
he
one
did give
question
a
for
lot.
clarity.
Go ahead.
Okay. So when you did, and my mom, okay, yeah, my mute is off. So I just need clarification to make sure I heard correctly. If you do not claim the market to market election and you have losses that exceeds $3,000,
Mhm.
because at one point I thought I heard you say you can carry over like into the following years.
Mhm.
Just clarify that piece, because I may
Yes,
not have
indeed.
heard that correctly.
Yes, indeed. So for reference, that'd be tax code 1211B, where Congress stated that each year the trader can only claim $3,000 in losses. Now, the carry forward means, let's say I have $10,000 in trading losses. I can only claim 3,000 this year, and I have $7,000 left. So when I file next year's taxes, there's a question on the 1040 that says, I'm sorry, that's on the schedule D that says, is this a carryover from a previous tax year? I would check yes, and then I would put in $7,000. And of that $7,000, I can only claim $3,000 again, which the following tax year, I now have $4,000, and it will eventually phase out. And that is a phenomenal question, which I would like to provide some more context on, because we're talking about phasing out. Okay, so let's say you purchase a MacBook. Let's say you purchase a 27-inch iMac computer and you paid $2,000. This is one of the main benefits of having a business. there's a thing called the Section 179 deduction. Please look this up. Section 179 allows you to claim the full price of your iMac that first year. If you do not claim the full price of your iMac the first year with Section 179 deduction, there's a part of the tax code called MACRS. That is MACRS. MACRS is the Modified Adjusted Cost Recovery System. What this means is over a period of 17 and a half years, because this is a desktop computer, that is 17 and a half years, they are going to phase out a deduction for you each year that you have that MacBook in use. If you have a car, depreciation takes place as well because you use this car for your trading activities. You can also take the modified adjusted cost recovery system or Section 179 deduction and phase out that deduction over a period of time. I just thought about that from that question.
Okay, thank you. Appreciate it.
Yes, ma'am.
Question to piggyback on the last one. So say for example, you have the 10,000 in losses, right?
Mm-hmm.
And you're only able to claim the 3,000 and you get to phase out every year, right?
Mm-hmm.
If, for example, we go through another terrible market again and we have a consecutive year of losses, are you able to then carry that on and continue to phase that out?
Yes, ma'am. So let's say I have this year 10,000 and I only claim 3,000. I have 7,000 left. I'll put that over to the side. Okay. And then the following year, I have another, let's just say $10,000 loss. I'm now at 17,000. Guess what? I can only take 3,000. So that knocks me down to 14,000 going forward. So your ideal situation would be, if you do not make the M to M this year, make it next year.
Answer her like an investor, not a trader.
Oh, well, as an investor, then yeah. You're not even allowed to take that M to M because of the amount of time that you are holding your securities, which means, yeah, you'll be subject to the capital gains loss limitation, wash sale rules, etc. So yeah, $3,000 for you.
Got it. Thank you so much.
Yes, ma'am.
Any others? And by all means, you can jump on mic if something pops in your head. Go ahead, Maria.
Hi. I'm trying to figure out, so with the wash sale rule and everything, and like how much will I get taxed on? So here's a hypothetical. Let's say of all my trades I took this past year, let's say I had $10,000 in losses. And then of all the profitable trades I had, let's say I had $11,000 in profit. So my net profit on the whole year is $1,000. Am I taxed on just the $1,000 or am I taxed on the $11,000 minus $3,000 of losses?
Okay, my first question is, what is your tax filing status? Single, married, head of household?
Married, filing jointly.
Okay, I was praying you was not going to say married filing separately, because that is the worst status of all 5 status. Okay, so because you are married filing jointly, we're going to go over here and look at your income tax rate. Your taxable income from 0 up to 20,550 is 10%. But if we go to our capital gains tax rate, and you're filing married, yeah, you're gonna have 0% capital gains. So your overall income tax rate would be 10%. That's it, 10% on that
Okay.
1,000, which is just $100.
Okay. So with the wash sale rule, it basically um it's kind of like what your net and what you ended up with at the end of the year, like plus or minus. So like as long as, let's say, yeah, like in this case, I ended up, let's say in the entire year I ended up plus $1,000. I'm just taxed on that $1,000, and all those past losses kind of don't matter to the IRS.
No, ma'am, they do not, and that will be indicated on your 1099-B, because once you take your 1099-B information and you put that either into your 8949 as a business or your Schedule D, is going to calculate it out for you automatically.
Okay, cool. Awesome. Thank you.
Yay. Any others? Any others? While some of you ponder. Oh, go ahead, Deetris.
You mentioned about married filing jointly, but I am married, but I was going to file separately. But so I thought that would be better. But since he just made that statement, now I'm having second thoughts about that, because I really don't know how to file as a trader. So I was said to avoid putting all that on my husband and he having a headache and trying to figure things out, because he does taxes primarily. I was just going to try to come to this class and maybe look up some other things and try to file it myself. So would it be better? Is that income, that capital gains income, is that just from trading, or is that like the income from earning like his job income with mine? I'm kind of a little bit confused
Okay.
as to how much we're going to be taxed, because I mean, if he makes, like I would say, 125,000 a year, and then I make a little bit, not much. I work part-time, so I have a little bit of income. I just don't want my trading income, because I just started last year, to affect him.
Okay. First and foremost, and that's a phenomenal question as well. Of the 5 tax filing statuses, married filing separately is the worst, because according to the IRS, you are married. So because you are married, this places you in the highest possible benefit of married filing jointly. Because if you look at like the standard deductions or your taxable deductions or the credits, like, I don't know if you have kids or not. Like the CTC, the qualifying credits for having dependents. If you put your son or your grandson through like summer camp or something like that, and you claim the dependent care credit, all of these credits are multiplied times 100 if you're married filing jointly. So it's the opposite when you are married filing separately. You cannot claim 90% of the credits married filing separately. This is the worst position possible. But if I can advise you right now, I would say you use the word, would this affect his income? And you also use the word capital. Okay, capital means you have a security you bought or sold at a profit or loss for a determination of time. That's what makes it a capital gain or a capital loss. Short term is anything under 1 year, long term is anything over 1 year. So because you are trading, you are going to receive a 1099-B. That 1099-B, if you do not have a business, that 1099-B will be reported on a Schedule D. If he filed taxes, this will happen on TurboTax, Tax Act, IRS.gov, it doesn't matter. So now, the ideal situation with your husband, it doesn't matter what he makes. It's all about what he's going to report to the IRS. He can make $100,000. I will happily take my trading losses and reduce that $100,000 down. It's not about what he makes, it's about what he reports to the IRS. So in this case, your fear will actually hurt you as opposed to helping you, because as a trader with a part-time job, you can reduce your reportable income to zero and make the IRS essentially give you money because you have net operating losses. Now, let's say you have a part-time job, you made $5,000, hypothetical number, but you got $20,000 in trading losses. You are negative 15,000. And here's your husband with $100,000 in income. That 15,000 you have, knock his $100,000 down to 85,000. And then you say, you know something, hubby, I want to write off every time we went to go out and eat, because we were talking about trade anyways, whether, he was complaining about, you taking a loss, or he was happy that you were successful, you were still talking about trading. So that is a qualified business expense. So then you can actually write off and deduct up to his 85,000 and make your tax liability zero. So it's not hurting you, it's actually helping you to file with him and with your losses, because at
Thank
least
you.
those losses can be carried forward if you don't take them in full this year. And just as a caveat, as an advisor on personal income taxes, I'll say this last thing. If you do not take the mark to market election, and this is your first year or your second year, and you have trading equipment, microphones, computers, monitors, etc., this is where the Section 179 comes in at. This is where the Section 179 deduction comes in at, because I might not make the mark to market over here, but over here, I can still do the Section 179. And that's just some advice for you.
Okay, and you said do the market to market, because I know it's too late for 2023, but I can for 2024. And I would just write a statement and attach it to our tax form.
Mm-hmm. Yes, ma'am. Yes, ma'am. You would write, let me go over here. You would write the year, you would say, Susan B. Anthony, am making the election under Section 475F, period. Next sentence. I would like this election to be made effective for the 2024 year. My name is Susan B. Anthony, Social Security number 123456789. That's
Okay,
it.
all right. I am just, getting this recorded so
Mhm.
I can tell him. Thank you so much. This has been so helpful.
Yes,
Thank you,
ma'am.
Randy. I am so grateful. And
No
to both of
problem.
you,
No problem. Thank you. Yeah, he is,
Can I
he's good at what he does as a CPA. So here we are. Go ahead.
also add, and you can correct me if I'm wrong, um, in reference to what's advantageous as, versus married filing jointly versus married filing separate, if one was to itemize, right? You can, if your deduction exceeds the standard deduction, that will be advantageous, because by filing separate, the other spouse cannot take the standard deduction. Am I correct or incorrect?
You are absolutely correct. If I file with my partner and we file separately, then over here to the left of the 1040 right here, it says standard deduction for single or married filing separately, 13,850. So I have to write off, if I'm filing separately, I have to write off more than 13,850 to still take advantage of the standard deduction with a Schedule A. And they're free to do anything that they want to do on their own tax return.
Any follow-up?
Oh, and by the way, let me just add this in, just to go in on that married filing separately thing. Okay, let's say you attended classes this year and you increase your learning as a trader. You took one of those people who got the trading courses, things like that. you are eligible for the American Opportunity Tax Credit. And the lifetime learning credit applies if you was a part of an institution that allows you to get higher learning. Married filing separately, you can't take those credits. I just
So
want to
what was
put that
those
in.
credits again? I'm just writing it.
Yes, the American Opportunity Tax Credit is non-refundable, but you still want to take it. Yet the lifetime learning credit is refundable. And refundable just means money's going to go back into your pocket. Like if you ever wonder like how some people can get back like $12,000 and you sitting scratching your head like, dang, why am I only getting back like 1,500? Because over just on the 1040, just real quick, on the 1040, there's a section called payments from number 25 all the way down to number 33. This is the most important part of the 1040 that determines how much money you will get back. And as you can see, it's federal income tax withheld. Because there was a question, someone, Randy, I forget who it was. They wanted to know paying taxes quarterly, was that the better option? Yes,
Yes.
paying taxes quarterly is the better option because those taxes you pay quarterly will come back over here into the payment section of your 1040, and this is where you get your money from.
All right, go ahead. Uh, Mom, I saw your mic off, and I wasn't sure if you had any follow-up to the married stuff before I give Maria the hand.
No, I think we're good. Thank
All
you.
right, no problem. All right, go ahead, Maria.
Thank you. Well, first off, on the topic of paying your taxes quarterly, I will just say I actually did experience one time, and it wasn't even it wasn't have anything to do with trading. It was back when I used to work as an engineer. Apparently one quarter, my husband and I, we didn't pay enough taxes out of our paycheck, and we were like employed traditionally. We didn't pay enough taxes out of our paycheck one quarter. And so when I went to have our taxes filed, we actually got hit with a tax penalty for that quarter because we didn't pay on time. So is that something that would happen if you didn't pay your taxes quarterly as a trader as well?
No, it would not. Okay, so if you are a regular trader without an established business, then no, you don't have to pay quarterly at all. But
Oh,
if you have an established business, it is wise to pay quarterly. And I don't know the rules of your state, but I fancy to believe that it's the same nationwide. In other words, if you pay quarterly, you would take the marginal tax rate. That's what you want to do is find your marginal tax rate. That's what it's called. Marginal tax rate based on the income you made quarterly. Let's say you made $20,000 in that quarter. You would then take the marginal tax rate. And I know from 0 to 14,750, that's the 10%. 14,751 to 41,000 is the 12%. So the first 14,000 is going to be 10%. The remainder is going to be 12%. So that's how you would figure that out every 90 days. And if you don't have an accountant to do this for you, I mean, I'm always up for hire, but you can also, get a standard software service like QuickBooks, Mint, etc. to help you figure this out. But you want to find your marginal tax rate. That's what you want.
okay, good to know. And then the question I was originally going to ask was so I have an LLC. I started it years ago and I didn't even specify what it was for. I left that like part blank. So since I have this LLC in existence and it's not tasked to any particular type of business, is it a good idea if I do move ahead with the becoming mark to mark, or sorry, the the yeah, the proper trader status, should I use that LLC to like is that there's benefit there?
Oh,
Is that right?
yeah,
Because
yes,
of all
yes,
the
yes.
tax write-offs with all the expenses and my home and all
You better
that
use it,
jazz.
Maria. You better use it.
Yes, yes,
All this tax stuff is so like mind-boggling.
yes.
I think we're all he's sitting here like trying to process. We're like, okay, so this is the best path.
Okay, so in relation to your LLC not being classified, that is called the NACIS code. That's that 6-digit code, NACIS. That's the code. That's the
Mhm.
code you would use to classify your LLC. One. Number two, I don't know the laws of your state, but once again, I fancy to believe they're all the same. You
Mhm.
have an annual filing to do every year to keep your LLC active. If you have not filed your annual filing notice with your local state, then your LLC may be dissolved automatically. Like if you go to like sunbiz.org for the state of Florida, you will
Mhm.
see a lot of corporations that are dissolved for not filing their annual filing status. So if you have not filed your annual filing status and your LLC is older than 1 year, then there's a good chance it's dissolved already anyways.
Oh, interesting. Is that with the state or federal?
State.
Okay, because don't you create, we create our LLC with the federal government? Or
No,
no,
ma'am.
we
No,
create it with
ma'am.
the state and then we report it to the federal?
Yes,
Mm,
what you get from the IRS is your EIN. That's your employer identification number, and that is for
right.
free.
Yeah.
That is free. All these companies out here, you know, selling it for $200, it is free. It's free. Now, with your state, you would register your articles of incorporation
Hmm.
with your state based on your EIN. And that's where you tell the state, hey, I have a business. If you have products or not, whatever you do for your business, you're telling your state, I have a business and I'm available for service. So that's for that.
Okay, so okay, yeah, I live in Ohio, so okay, I'll go. I'll do some research and find out if I still have an LLC or not. Thanks.
Mhm.
Nice, Maria. That was perfect. I'm glad. Well, you got more answer than you thought. Oh, no.
Seriously, this is like, yeah, I don't know. I have so much respect for anybody who like does taxes and is a CPA and like does any understands any of this because it's like, ugh, this is like so stressful and
And
mind-boggling to me.
how many
So
years
thank
again
you.
have you been doing taxes, Shavar?
19.
Holy smokes. Yeah, so you know what you're doing. Good work, sir.
Long time, yeah.
We like numbers over here, right? All right. Any other questions that you guys have, scenarios, theoreticals, hypotheticals, all that you want to throw at Mr. Shavar tonight so you guys can get everything that you need answered as far as utilizing your LLCs, all of that, full-time trader, everything.
If I can say something else right quick, just
Mhm.
real short. Another benefit of having a business is to establish business credit. I know we're not talking about credit, we're talking about taxes. But for the life of me, one of the most phenomenal benefits of having a business is to have business credit as well, which is a whole different topic. But if you have an LLC, an S Corp, a C Corp, a trust, even if you're a sole proprietor, take advantage of establishing business credit as well. No matter if your personal credit is good or bad, utilize it for your business credit as well. Mhm. And that's it.
All right, go ahead, Deidris.
So do I need to have an LLC before April 15th when I write this letter to request? the market to market?
No,
So I just need
not at
to
all.
set it up sometime this year
Yeah, yeah.
for trading purposes. Okay.
Yes, because at the beginning of this, let's go back up here. About the trader in securities, IRS topic 429. Um, Special rules apply if you're a trader in securities. You are a trader in securities. In the business of buying and selling securities for your own account, your Fidelity account, your TD Ameritrade account. The law considers this to be a business. So by law, by IRS law, you have a business, but you're an individual without an LLC. This is the only industry that allows this trading. So you do not have to have an LLC to make the M to M election.
Okay, great.
Yes. Okay, cool.
Great. Thank you so much.
Mm-hmm.
I know we're going over time, but I do have one more question
You're
because I would
totally fine.
always,
I want you guys to take up. I want this. Taxes is like huge, right? So we plan for an extended night session due to getting your questions answered. So please ask away.
well, the IRS is never clear, and that's just the government. I work for the government, and
Yes,
things
Lord.
very vague, so they can confuse people. But you see your bullet point that says your activity must be substantial.
Mm-hmm.
Define substantial.
Yes, so there's been extensive research done on that. There's the whole more than 6 months, but not less than 9. Substantial just means, by my own research, you've made at least 2 trades a week for a calendar year. That's substantial. 2 a week. Or you can do 4 every 2 weeks. Or you can do 8 every month. 8 trades a month is considered substantial.
For that calendar year.
Yes, ma'am.
Okay. All right, thank you.
Well, yes, Maria, we trade. That's why I said you better use that LLC, girl, because we are traders over here. Okay, M to M, LLC, for that, all the above. All right, all the above. All right, so if you guys don't have any other questions, or if you guys have any like questions that you have to kind of marinate, do some more research on, and then come back to, I can set up something for that. I can send you guys out like a survey to see what type of follow-up you may need or want uh in order to set yourselves up. I love you all's questions tonight. You guys drop like great questions. Like, I mean, I couldn't even think of some of them to be honest with you. So that's great. We can transition over to peeping at the market because I know you guys are hungry nighttime traders as well. Before we go, if you guys are good on taxes, just because you guys know I'm in for trading as well, and do a little brief session, and we will be back tomorrow, 9 a.m. for live day trading and see where this market and this market news tomorrow is going to take us. So one final call for questions for Sampson Financial, Mr. Shavar Sampson, for tonight. Thank you so much. Barbara, go ahead.
Just one last question about this mark to market election. What if I asked to do it for the following year, for 2024 now, but I don't end up being trading substantially in 2024? Like I planned to, but then I didn't do it. Is there a problem with having that election and not really using it?
No, there isn't a problem at all because, like Miss Pam just said, the IRS is never clear
Mhm.
Like it's never clear. I just surmise that based on my own research, but you may surmise a whole different, you may come up with case law from the East Coast that says one trade a week is not clearly identified. What they're looking for is just activity. Just have activity and you're good.
Okay. Okay, good. Thank you.
Mhm.
Consistent activity, I think, is the bigger thing throughout the calendar year. All right. Any others? Nobody else? I know some of you probably had questions that already got answered. Thanks, Maria. You were such a great supporter from day one. All right. I think we're good. Thank you so much.
All right.
And I appreciate you guys. And let's get into some trading. You can hang around if you want to. I didn't think
know
so.
about it.
But
No.
we're gonna preview this market action and go
All
from
right.
there. So let me share screens. Thank you so much. Round of
All right.
applause for Shavar. He gave great information, y'all. Deep information. So you guys let me know anything else you guys need. You guys know how to reach me if you need anything else.
All right.
All right. Thank you so much. And I
Okay.
will see you. Bye. Thank you so much. Everybody say bye. Love it. All right. Now let me share my screen back to my chart and we'll do a quick trade. Take this image off. All right. Talk about this market that did nothing all day to the end of the day. It was just ridiculous. But we will talk about it and see where this market's gonna go next. See if you guys want to take any night positions and go from here, and we can discuss it. So, looking at the daily futures, I have my lines here. I'm not recharting. It's Tuesday. You know where we're at. We did charting on Sunday. We had some decent movement on Monday. All right, this was today, and now we're here. So everybody can see my screen, right? Just making sure that we're good there. All right. I think you guys are good because you haven't complained about it. All right, so we are pushing up a bit tonight already. Like we gapped up quite a bit. And so this is where the gap was created for tonight. And so we've gapped up and then we're going to kind of, I believe, continue to push up now. Do I think we'll wick through the gap? Yeah, at minimum. We at least usually always wick through the gap before putting a candle body through the gap. So wick through the gap and we'll probably continue up. That's just what I see, because what I see is what our trading sister Tandra calls a catty-wop W. All right, bop, 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 like whopped, and it's going up into that neckline area where it needs to kind of consolidate a little bit, but then can probably continue out. And I don't know, it could chop a little bit more, possibly. It could also just kind of run up. So we're gonna see which one it wants to do, how it wants to do it. All right. And the best way to kind of identify is as we come down in the 2 hour. So tonight, what we're looking at, I marked the gap with the blue lines. This is the previous gap that we have with the blue lines on the futures. We had number consolidation all last night into today until like the last hour. And then this happened. And it was like, what? All right. Yay. So that made my trade look great. But my target is 49.13, like I said. So because we are all the way, we have broken past this neckline here. We will usually chop right above it and then continue up. Now, where do I get that from? Let's come back to the daily right quick. If I put let's mark the wick. Let's take a second, mark the wick. From what we have so far, and let's make it yellow. So it stands out. Whoop. There we go. And let's come down to the daily. And there's a lower time frame level, 2 hour, that's giving me 49.13. But what I'm overall looking at, if we kind of take away the two dotted lines, excuse me, in here, the 49.13 and 49.24, just imagine them going away. So please bear with me. And then notice where we are currently trading at, 49.02. All right. Breaking past 49.06 is peaking that wick that we just created there. It's going back up above it. And then if we pay attention to the long candle that we're in, back here, that was created on January 13th of 2022. Okay, a whole year ago. That's what we're back to. We have this nice long can't breakaway candle, right? And I expect us to finish running up this candle because of where we are in and out. It could take a little bit. We have this wick, then we have the candle body between 49.13. I actually got this line from a 2 hour, but you can see it aligns with that wick of the daily candle right before it. And then my 49.24 is pretty much in alignment with the body of that same candle. All right. So those are two levels as it starts to come up that could potentially pause price, make it drop a little bit. I'm gonna be suspecting like some fair value gaps to the lower side that need to come back and get filled and things like that. As we come up here potentially, or it can do a breakaway move depending on what type of news data we get. All right. So this is the move that I'm looking for based on the candlestick patterns that I'm reading. I'm just reading straight candlestick patterns, and I am using the S&P. This is the S&P futures. All right, with the B adjust on. Okay, with it on. All right, on gives us a little bit more candlestick data to play with. All right, off does not. All right, and we've talked about that. We spoke about it and had a great little discussion about it in the Telegram chat. Right. All right, so we're good. So that's where I got the levels from, if you all were curious. And that's why I think we're going up too. What we do in the interim, sure, but I think that's what we're getting up to. And then from there, when we break that top, that's the wick, 49.56. And then the weekly candle top, the second one, 49.89. And then, it's just kind of like all new territory. And that's okay. All right. So that's the levels I'm looking at. So for now, 2 hour will probably come back down and fill this gap. It's a pretty nice one. And that's okay. It can do that. Boom, bam, pow. Go ahead and fill this gap down potentially. It's a fair value gap. Within that gap, you guys see where I marked it. Okay, with the blue lines, we see the fair value gap. This is a 2 hour. So we know most likely we'll short. We could potentially short through here. The gap between this fair value gap and this fair value gap is quite large. So we may not go as far down into this lower fair value gap. It just depends. But we know what we're looking for. We're looking for candle wicks. We're looking for any type of signal that's letting us know the price may come down sooner than what we expect, or pull back or pause or whatever the case may be. But the signal at the 2 hour fair value gap. All right. So I again am overall expecting price to continue up, but we'll see how it plays out. And we do have, what is it, ISM manufacturing, if I'm not mistaken. Forex Factory, Richmond Manufacturing, New something, no, Flash Manufacturing. There we go. Manufacturing. So I was like, what is it? Okay, so Flash Manufacturing PMI is not pre-market data. It is 9:45 after the market opens. Okay, be aware of that. All right. So we are expecting that data to come in about where it came in the last time. So we'll see what it does. As long as it stays in favor for what we want, the market will probably continue to push up. And that's just my consensus based off the futures. If you want to take a quick glance at, I'll make sure we break at 9:30 here, the latest. Looking at the Dow, just a quick glance overview of how it made a very nice order block here, and it started to push up above it and started to kind of make some kind of looking breakaway potential, keyword potential. We need another candle to go up here. and go from there. So we'll see if we continue to break up, but that's what I'm thinking. Of course, we have the daily fair value gap, and then here's the Nasdaq. And the Nasdaq looks like it is breaking up quite nicely and wanting to continue to push up and meet this red line, which I got from the very top here. So breaking this level at 17,703 will be creating all-time high on the Nasdaq futures. All right. So that's what I'm looking at. We have nice support levels. We have, W's or sideways W's, catawalk W's. If you have the deck, they have some other names. I didn't go into all the names of the W's there, but this could be considered like an Adam and Eve one, potentially double bottom, but just not as even. But anyway, we're getting some nice levels of support is what I'm getting at based on the candlestick patterns. So that to me is all good signals that price wants to come up, and it's just a matter of time and patience as it does so. All right. Any other comments, questions, or concerns for tonight? We had a great tax night. We got everything. The recording will be posted for tonight. I will get this edited and posted up for you guys as soon as possible. So anything that you missed, you can hear. Hopefully you can get your questions answered in that. But if you have any follow-up, please reach out to us and we will help you out the best that we can. All right. All right. So you guys have a great and wonderful night, because I'm also getting sleepy. I'll see that like, ooh, time to go to bed. Because and we're gonna come back tomorrow morning for a great day of trading, 9 a.m. Eastern Standard Time. You guys, God bless. Have a blessed one, and I'll see you guys tomorrow. Ciao.